I always used to stress about money. But as soon as I learned this about money, I stopped stressing. I stopped worrying about money. And I'm going to share with you exactly what that is, not in a course, right here. This is by far the most important lesson I had ever learned. I really wish I was taught this in high school or college or when I was younger. But I was never told to do this because I never realized the dichotomy of life. That two-sidedness that said, on one hand, I want to save and I want to retire well off. Yet on the other hand, I want the latest iPhone and I want the latest and greatest car. This one secret helped me bridge the gap forever, so that even if I'd lost money in a business venture, or I made a lot of money doing whatever and then gambled it all away, I knew I would still be okay, as long as I followed this rule. 78% of us live paycheck to paycheck. That's because whatever our income is, we usually end up matching our discretionary expenses right to the amount of our new income, whether that's higher or lower. It usually means new cars, new hats, bigger apartments, bigger and better and faster, whatever. Yet the stress of living paycheck to paycheck never subsides. This rule could completely eliminate that stress, as it has for me. I only wish I had started this earlier. Now, if you think it's too late for you, consider the old Chinese proverb. The best time to plant a tree was 20 years ago. The second best time is now. So as you immerse yourself in this short video, consider this powerful information that's going to help you become financially free on autopilot, and share it with your friends and family. And hopefully, this can help change your life just like it did mine. In our culture today, we're constantly struggling between investing on one hand and spending on the other hand. That may be because of the societal pressure to continue to spend and have that latest and greatest. And the biggest culprit of all of this is simple. We spend so much more time thinking about how to spend our money than we do thinking about how to save our money. We spend so much time consuming goods, the vision of vacations, the idea of Amazon products being delivered next day or within 2 days, or digital products being delivered and satisfying you right now, that we don't even have time left to think about saving, and before we know it, when we would always tell ourselves in the past that, well, we'll save, we'll invest one day, that day just never comes around. So I came up with an idea that helps prevent falling victim to this constant struggle between spending and investing. As you may likely already know, I'm a real estate broker and a real estate investor, and I love to share as much knowledge as I can on this YouTube channel here. But what you're about to hear may surprise you, because you might think, well, wait a minute, Kevin, that's not real estate. Exactly. But stay tuned, I'll explain that. Every Friday, I buy $250 worth of stock, no matter what. Every single Friday. And sometimes I just transfer it into the account, but as much as possible, I execute that trade. I want to be in my stock account executing some kind of purchase order. I don't sell, I don't day trade, I don't short-term up and down trade, I don't do anything. And that might blow a lot of people out of the water who say, wait, you shouldn't just set it and forget it. That's a mistake. You could do better, you could do better, you could do better. I'm not worried about being the best. That's what holds so much of us back, is we're worried about being the best. And so what do? Nothing. We end up doing nothing. We're so worried and so risk adverse that we do nothing. When in reality, you could do as I do and either simply pick a stock and continue to buy it every Friday, or put it into something like a Vanguard Total Stock Market Index Fund. Now, you might be thinking, what about the fees? Look, I'm not going to advocate a platform to you, but there are plenty of either low-cost or no-cost commission-free trade platforms out there that you could research on your own. But what I really want to show you is the power of doing exactly this. There are two reasons for this. One, psychologically, every single week you will be reminded, wait, I'm an investor. I actively need to place my trades now. I've transferred the money, but I have to place my trades. This psychological movement or reminder will actually help prevent you from spending unnecessarily. It is an incredible psychological trick, and this is probably by far the most important lesson out of this whole thing. Lesson number 2, the time value of money. Just for ease of math, let's use 8% simple interest as the compounded return you'll earn every year on your stocks. Now, if you don't know what compounding means, understand this. If in 1 year you invest $100 and you make 8%, you'll have $108 at the end of the year. $100 of your original investment and $8 of made money. Money you didn't have to work for. Passive income. The very next year, you'll make 8%, not on the original $100, another $8. Instead, you'll make $8.64, because now you're also making that 8% return on the $8 you made. The beauty of compound interest is time. The earlier you begin, the greater your multiple of earnings potential passively will become. If you followed this investment strategy of investing $250 every Friday, you would invest $13,000 every single year. Obviously, if you're more aggressive, you can invest more every Friday. If you're less aggressive or just don't have more, then invest $100 every Friday or $50 or some kind of multiple that works for your life. But the sooner you begin, the better, and I'll show you why. It's mind-blowing. Just stay tuned for this. But first, if you followed this course from the time you were 18 to the time you were 38, simply $250 every Friday, by the time you were 38 years old, you would have invested $260,000. However, your stock market account would be worth almost $600,000. That's a multiple of 2.3 times the money you invested, thanks to the power of compound interest. Watch this. If you left it there for another 10 years and you were 48 and you kept doing the same thing, $250, $250, $250. It's not even that much money. You would have invested $390,000 and your stock account would be worth over $1.4 million. A multiple of 3.8 times the money you invested. Now, what if you left it there until you were 58 and you didn't want to sell yet until you were 58? You kept doing this. $250 every Friday. You would have invested $520,000. But your account would be worth almost $3.4 million. All of this at 58 years old. That's 6.5 times your investment. If you really wanted to get rude with this and you really started when you were 18 and you did this for 50 years to the time you were 68, you would have invested $650,000 and it would now be worth over $7.5 million. That's over 11 times your original investment. Now, to show you why I stressed start now, don't overthink this. Just do it. Don't let any of those people get in your ear that say, well, you could do something better. You should do this. You should do that. I get it. I'm a real estate broker. I invest in real estate, but I also do this because it's such an easy autopilot. I could set on coast and I have the $250 transfer out of my account every week automatically. And I purposefully do it as $250 every single week. I don't stray from that because if I started seeing minus $1,000 every month, maybe I wouldn't do it anymore. Maybe I'd cancel that transfer. But $250 is too easy. I could do that in my sleep. You should too. Whatever amount to scale is the number for you. Do this. But again, the reason I stress the importance of time is, let's say you didn't start this until you were 48 years old. But then you said, I will invest $50,000 per year. That works out to just under $1,000 per week for 20 years. At that same 8%, your stock portfolio value will grow, and it will grow nicely. It'll grow to about $2.3 million. You'll have invested $1 million of the money that you earned to get to $2.3 million, and you would only be able to take advantage of that 2.3 multiple, when the person who started earlier was able to take advantage of multiples ranging from 6 to 11 times the money they actually invested. That's why myself at 26, I know that even if I didn't yet start, I would start right now. Because I know that in the long run, all of my worries wouldn't exist. I wouldn't have monetary worries, financial woes, because I could always resort to that stock market account. In addition to that, if you're somebody who likes to buy real estate, having a nice stock portfolio set aside is extremely helpful when you want to prove your sincerity to buyers when you're making offers and you need to show proof of funds or you need to show the bank that you have reserves. When you show the bank this stock account, you'll get any loan you want, and then you'll be able to take advantage of the power of leverage in real estate while at the same time making bank, putting your money aside for the long run. Again, I'm not suggesting invest in the stock market for the short term. I do not believe you can successfully guarantee long-term returns by trading for the short term. To me, short term is less than 20 years. I plan to put my money into the stock market for 20, 30, 40, 50 years. Hopefully longer. Hopefully, I get to keep investing longer than that. In the meantime, I'll keep making videos for you folks. Thanks for watching.